prediction on what prices are going to be like. And this graph is a really important one. This is probably the most important data point if I was going to look at one thing. And this is month supply. So this is how long it would take our market to sell out if no new listings came up. In a traditional market, you need about 4 months of inventory to be balanced. Now we still have under 2 months of inventory because sellers are just saying, hey, Zach, you know what? At these prices, I'm just going to wait.
Yeah.
So we've kind of reached that point for now that sellers are like, you know what? If I can hold on to it for another year or two, I'll wait for the market to rebound and sell my property later. So if inventory remains low and interest rates continue to rise, expect prices to stay the same, if not maybe come down a little bit because interest rates just won't be able to support the purchase prices. But if inventory continues to stay low, price points are not really expected to drop that dramatically.
What's up, everyone? It's Kayla Smith, Realtor and investor out of the Niagara region. But today we have Zack from Phipps Brittain Real Estate in the Waterloo region. Zack, what do you got for us today?
I got all the good stuff. Good to see you, Kayla. Thanks for having us back on the channel. Pumped to have you take over too. Today, I'm going to go over multi-units, everything you need to know about Waterloo region, joint venture deals, a little bit of deal analysis, and then really our process and strategy of working with investors. It is very similar to how we work with people that are looking to do traditional purchases and sales. Some of the methodology is really, really similar, but some of the details on really the experience of working with me and my team so that, you know, we have a lot of people that are watching our videos that are doing a lot of research to get a better understanding of what it actually looks like. We recently hosted a fall investor event here too in Waterloo region. We had some great feedback from the people that came and some of the people that weren't able to come and had some follow-up calls with us. So we'll share some of our experiences from that event as well. But I'll go through our presentation real quick right now. We're going to cover multi-units first. And what I think is really important on this topic, Kayla, and for the rest of you guys watching is how to successfully invest in multi-units now that our market has like definitively shifted and kind of settled a little bit. And what I mean by that is when you're investing in a market that is consistently rising, your strategy and the types of investments that may make sense are going to be different than if you're in our current real estate environment. So I think it's really important to identify really how to prepare and identify the good types of deals and really the value in multi-units. Because a lot of people are reaching out saying, hey, Zach, you know, I want a cash flow positive property. And in our market, the only cash flow positive properties are multi-units and maybe little tidbit, little nugget for any investor here, maybe some semi-detached. We're seeing some good value in semi-detached properties right now. But typically multi-units, you know, 2, 3, 4 units minimum. Those are the only ones that are going to be cash flowing with consistency. And investors are having trouble finding the value in those. So we're going to dive into that. We're also going to talk investor Hotlist, Waterloo Region real estate market real quick. And then our investor event, we went through JVs. JVs are a great way to start or to scale any real estate portfolio. So we'll get some of your feedback from that as well, because I know you got experience.
Yeah, awesome. This looks great.
So I'm going to start off. This is probably the most important conversation of the whole video. And
all right.
Multi-units. So let's say for the purpose of this, we're talking more than 4 units typically.
Okay.
Now, the big problem in our market, Kayla, because I know you're out in Niagara, is in Waterloo region, whether you're Kitchener, Waterloo, Cambridge, or the smaller towns around, the income that these multi-units are generating versus the purchase prices these investors are asking, that you're just getting such low cap rates. You're not really getting much cash flow unless you're putting significant down payments down or you're getting really favorable financing terms, both of which have become more difficult as financial constraints have really choked investors for the last 6 months. So this is the kind of general concept and practices and mindset kind of topics that you guys as investors really need to execute on to be successful. Also applicable to people that are going out and, you know, maybe buying primary residence and stuff, but more so just for multi-units. Like, do not underestimate the value of finding the motivated. So
Right.
what I mean by this is, I'm sure you had it in your market, is people that listed properties in the mid to late spring as the market was starting to kind of really make that shift, and they were listing it at yesterday's price
Yeah.
in today's market. And they've barely adjusted their price. They still want that premium that they thought they could get 4, 5, 6 months ago. To me, those people aren't necessarily as motivated. That doesn't mean they aren't, but that signals to me, look, if you've had a property in the market for 6 months and you haven't done anything to kind of change it up, whether that's increase the rents or change your price or offer favorable terms, vendor take back, something like that, then you're not typically that motivated. So like doing a deal, doing business 101, find the motivated. Do not underestimate how important that is. Other thing is, when you're investing in multi-units, it's different than just buying a single family home or buying a property converted to a duplex or a turnkey duplex. Your value, you have much greater nominal value, but your timeline needs to be much longer. That is because you have more units and tenants to deal with, bigger mechanical systems and larger properties to deal with, and a few more variables. Furthermore, I think people can look at this as, instead of a, let's say most smaller investment projects are 3 to 6 months, you're looking at 12 months plus for most multi-units, 6 units and above. That's if you need to increase rents, you need to update units, you need to turn over units, you need to, get vacant possession, whatever it may be. These things just take time, but the potential returns are dramatically larger than what you could get for smaller deals. And that brings me to my last part, is that the capital needed is also greater. So if you guys are going out and investing in these larger multi-units, a big hurdle that we're finding with our network is they've had success with either a primary residence or two. Maybe they have a couple investment properties they've done well on, a pre-con or two, or a property they bought a few years ago and they've done really well on it. But that doesn't quite give them enough capital to really give you enough breathing room and enough cash to make those larger acquisitions. So a few ways that people increase the cash available or the capital that they have available: consolidate your smaller holdings, right? If you have 2 or 3 single family homes, pre-con projects that you've held for a few years, duplexes under your belt, selling 1 or 2 of those to give you the cash needed to go jump into something bigger is really common.
Yeah, so this is great because it ties into your JV chat and, down the road in your presentation. But I'm wondering, what are you doing to assist your clients in finding the motivated people? Like, what is it that you do to assist, the people that you're working with? Because I know a lot of times we as realtors can kind of see a little bit more than what they can see. I know for some reason, a lot of times if there's like a vendor take back, it's in the realtor notes as opposed to what everyone can see. So I'm just wondering, so everyone knows, what is Zack doing? Because I know he's helping everyone the best that he can in those situations.
Really good question. So like, new listing comes up, new multi-unit comes up, we're going to do an initial assessment to see really kind of what the initial underbelly is. And for those of you that are looking to like learn more about analyzing deals, there's lots of videos on the Canadian Real Estate channel. Kayla's gone through it before. I've done it on my YouTube channel as well. Like, the basics of analyzing a deal is fairly straightforward. What's the purchase price? What are the expenses? And what's the income, right? What is it right now? And if you don't know those things, you don't know how to acquire those things, then get connected with a realtor or another investor that has experience doing that. That stuff is kind of like second nature. So we do that first initial look. And if we notice that it has potential to be a good deal, but the price just doesn't make sense, then we'll probably just set up an initial preview before we take any of our investors through. And we'll call the listing agent to ask those additional questions. Okay, great. Well, how did you get to your pricing? Okay, we can look up how long they've held the property for, what they paid for the property. That's not necessarily the most important thing, but it may indicate how motivated they are to actually let go of it. Have they held onto it for 30 years, or have they had it for less than a couple of years and maybe they're in a financial pinch and they need to move it, right? Or have they already increased all the rents and gotten all the value out of it and they're looking to sell it to a turnkey investor? So we'll hop on the call with the listing agent real quick. We know most of the listing agents that are selling the majority of the multi-unit properties here in the area. And we can tell right away from the phone conversation if, the seller is legitimately trying to get a deal done, or if they're fishing for an outrageous price. Yeah. Because if they've dramatically overlisted it and they're not willing to, work with anybody in any sense, then that tells me that they're not that motivated. Another really good way to figure out if they're motivated is to have those conversations before you view the property. Have your realtor discuss with the seller or discuss with the listing agent, and then to bring them an offer. A really good way to see how motivated somebody is just much different talking when there's actually an offer on paper. An offer on paper is real. How do they react to it? How do they negotiate with it? Are they just saying, hey, screw off, that's way too low, there's no effing way? or they giving you a sign back, or they hop on a call and work it out verbally, right? There's the best way to find motivated is quick phone call between the listing agent and the buyer's agent, and then bring an offer that is suitable to you. If they react poorly to it and they don't negotiate at all, then they may not be that motivated.
Yeah, we just had this happen where there's a house that's been sitting for, I don't know, 75 days. It's an estate sale, all this stuff that kind of the stars align for, you know, them to take less, and it's a conversion, but it's a conversion at the right price, so it makes sense and all this stuff. And I called the listing agent and it was just like, oh no, we're not motivated whatsoever. We're the exact words. So
next.
It's I think, and maybe, I don't know if you're feeling the same in your market, but us as real estate agents, obviously before when things were selling in seconds, it was, no, bring your highest and best, even if there isn't another offer, But now we're a lot more open to these conversations because the market says that we have to be. And I think that that's mostly across the board. And if they're not, they're pretty open about that too.
Absolutely. And we'll talk kind of about some specific strategies for a little bit of negotiating. But like, if you need more capital, consolidate some of your smaller holdings, get partners or alternative lending. Partners is a great way to scale your portfolio. And we'll talk about that kind of at the end of the presentation.
Awesome.
But again, on multi-units. So if I were to tell you, I mean, if anybody watching this has been watching the real estate market in Waterloo Region, you're an active investor, you're trying to get invested, maybe you've been on our investor hot list for a bit, you're watching some of the deals we're sharing. If I could tell you that there was a multi-unit at $200K a door, you could purchase it as is with a 4% cap rate, and there's potential to raise rents 50 to 100%. And then you go kind of refinance and repeat this probably within 12 to 16 months. Everybody on my hot list, everybody would be like, yeah, I need to take a look at that deal. That's it for our market. 4% cap rate, $200K a door for a larger multi is great. That's fantastic. So this was a purpose-built sixplex that we shared on our investor hot list a couple months ago. They originally listed for 1.6 million, and we got an accepted offer for our investor at 1.2. So we're paying $200K a door, you know, 2-bedroom units, purpose-built, parking, everything, like on-site laundry. But
it's nice.
It's great. At 1.6, the numbers aren't great. 1.2 numbers work as is. And so why I wanted to highlight the key things is, you know, about finding the motivated, you know, about understanding how to negotiate and approach those types of deals, about how to raise your cash. Those are all things we cover before we start looking at listings for clients, because we want to make sure that the deals that they're looking for and the deals that we're showing and negotiating make sense for their long-term goals. For this type of property, though, a big reason why we were able to secure the property at such a favorable price was, one, the sellers were motivated. Two, we were able to bring an offer that didn't have conditions. And so, you know, there is a lot fewer competitive situations in our local market right now, Kayla. So if anybody's actively looking or thinking about getting into properties here in Waterloo Region, sometimes there's multiple offers, but for the most part, there's not. So a lot of people are bringing conditional offers, conditional on finance, sale of buyer's property, inspection, whatever it may be. So this particular seller, they're retiring. We learned from the listing agent that they were retiring. They've held the property for a long time. They've done really well, but they've had a couple deals fall apart on conditions and they're kind of just sick of it. So we say, yeah, no problem. We can work with the terms that you guys need. And we can come in firm, but exchange for that certainty, we're going to need a little bit more of a favorable price. Because as an investor or as a seller, whether it's your primary residence or one of your investment properties, a bird in hand, a deal in hand that's firm, may be worth slightly less price than going through the negotiating process and the conditional period with multiple other investors just to get deals to fall apart.
Especially right now.
Absolutely. So that certainty will buy you a better purchase price as an investor right now. And, you know, beforehand, that may get you able to win the property. Now this will win you the property, but at a much more favorable price. So finding the motivated could be as simple as bringing them a firm offer at what you may think is a very favorable price for you as the buyer. You may be surprised at the way they react. A bird in hand.
Like this looks, and these are like some of the nicest looking purpose built. It looks like they each have a balcony, like the upper units, which is nice.
Yep.
It seems like it offers
these are really common in this neighborhood. This is a really common multi-unit neighborhood. Lots of purpose built brick builts in there. Big lot. So I mean, there is opportunity to add storage or garage space in the future. The value here is raising the rents, right?
Yeah, that's awesome.
As is, it'll carry, you'll make a few $100 a month. And then as you turn over the units and improve the rents, you can renovate them. You can just put in some dishwashers in these and get a couple extra $100 per unit. There's lots of things that we can do. But again, it's like a burr, but it's just a little bit longer than if you're going to do like a 2-unit or a 3-unit property. It's just bigger
and it's
scale.
like a bank account too, just like what you're saying. Like you do one and then you can refinance. You can do another one and then like it's a little bit different than. And again, I love the burr. I love the 2-unit, 3-unit, whatever it is. But this is a little bit different because those do hit, kind of their max unless the market goes up.
Absolutely. This would be worth close to $2 million after we turn over the units.
Yeah.
And we got it at 1.2. So
yeah,
I see a ton of value in that. And I think we can do that within a year, maybe a year and a half.
That
right.
Looks great to me.
So one thing that we've been having the conversation on and in the comment section is, I've talked about this in a few previous videos, is just that investor mindset is, look, like market's going to go up and down, up and down, up and down. And me as an active investor, I'm buying in every type of market. Right. So my average should level out in the long term. Now, I'm not saying that that's just me. That's not everybody. But I would love to hear people's opinions, regardless of what market you're in, whether you're in the States, whether you're in Canada, Ontario, BC, East Coast, whatever. Do you think prices are going to be higher or lower than what they're at this time next year? So October 18th rolls around next year. Are prices in your market higher or lower? And then think, okay, what about in 5 years? So for me, it's very easy to get caught up in like the 1 or the 2 year. There's a little bit more uncertainty. But if I'm thinking 5 years out, chances that my market's going to be dramatically more expensive, I'm much more confident in that. 10 years out, it's a guarantee. 20 years out, I bet my life on it. So I just think that I'd like to hear people's opinions because there's way too many of them out there right now.
Yeah.
If I had to answer this question, are prices going to be higher or lower this time next year? I would probably answer they're probably going to be fairly similar. In 5 years, though, I bet you we're a few $100,000 more expensive on average than we are right now.
Yeah. I mean, we saw a peak. We know that it can go that high. We've seen it come down from there. So there's no reason why it can't hit that and then some again. It's just obviously the timing of it. We do this, just seasonality and economic situation. So I will be interested to visit your comment section and see what goes on there.
Me and Derek are going to be in the comment section. I would love to hear some people's opinions on this. And we're going to talk about a few of the key factors as to why markets may react the way that we think they're going to. But in the meantime, for people that are watching, if you want to get in on the preliminary stages of looking at Waterloo Region, that last deal that we sent out to our investor hot list more than once. And one of our investors finally picked it up. So if you want on our investor hot list, go to phippsbrittainrealestate.com. This is my typing fingers. There will be a link in the description. You go to this section right here. And like, I even put sweet investor hot list. Give me them sweet deals. Like some people leave me really cute comments and we have a good time. And other people are like, give me the list, Zach.
Right.
I don't really care. Just select the investor tab, say investor hot list, please, or I want the sweet deals. And this, you'll get an email every week. I'm starting to live stream some of them as well to go through a little bit more deal analysis. But this will give you guys a preliminary look on what multi-units are out there that we think offer good value, duplex conversions, potential flips, potential tiny home options, and then as well as some sold information. This is a really good first look. If you are starting to understand or want to get a preliminary look at Waterloo Region, this is your first stop. So investor hot list, phippsbrittainrealestate.com/contact is going to be your number one stop.
And Zach, for everyone, like you're saying Waterloo Region, if there's someone that's looking in the area that maybe isn't super familiar with, how far out you cover, but they're interested, why don't you give us just a kind of a quick list? That's actually a really good point.
For our first time viewers or people that aren't familiar with the Waterloo Region, you've probably heard, Tech Capital Ontario or something like that because Google's here and a bunch of other big players. Waterloo Region is Cambridge, Kitchener, and Waterloo are the three major cities that have grown into each other that are around the 401. So basically, if you're heading, towards London, Ontario, you got to go through Milton, through Guelph, and then through Cambridge and Kitchener. And then you hit Woodstock and then London. So we're about an hour and a half away from downtown Toronto on the 401. You'd go through Cambridge and Kitchener, and I'll show another slide after. Cambridge and Kitchener attached to the 401, Waterloo the furthest from the 401, and then prices kind of relate to that as well. And
you're servicing those areas?
Those are our major markets. Waterloo Region, Wellington County, a little bit of Brant County, some of the surrounding areas. Like a lot of our investors are not a lot, but some of our investors and clients have done moves out to Stratford, to your Woodstocks. They're smaller markets that they're definitely a little bit slower and easier to understand just because they're a little bit smaller, not as much volume, but they offer different price points. And for the surrounding areas, like we have affiliates, we have referral partners for the surrounding markets if we're not really within our expertise. But specifically for our investors, you're probably focusing on Kitchener, Waterloo, Cambridge.
Awesome.
Good question though. Fair question. So on that note, before we get into Waterloo Region and really everything I think most investors are going to want to know about what we're at right now and what I see in the next few months, I just wanted to have no surprises about really our process. We've had a lot of people from the Canadian Real Estate Channel get in touch with us. A bunch of people showed up to our investor event a couple of weeks ago, which was fantastic. But our process is really straightforward. If you want to, just get an initial look, you get connected on our investor Hotlist, or you can email me direct, right? This is a great way to get a quick look at some types of deals. You start to learn our market, a little bit about who we are and our process, or you can email me direct and set up a quick call. The number one thing we do once we get in touch with people is just to identify their goals. Say, hey, Kayla, are you looking just to kind of watch our market and get some of our resources, or are you planning on actively adding to your portfolio and growing in the next 1 to 5 years? Okay. So if people are just looking for information and resources, great. What do you need? We'll get it in your hands. Come talk to us when you're ready. For everybody else that's legitimately planning on either starting or scaling their real estate portfolio and wants Waterloo Region to be a part of that, then we'll hop on a call and set up a time to actually do a video call or a meet in person. And the whole point of that is to identify your 1, your 5, and your 10-year goals, and then dive deep on your current financial situation. And I know, I'm sure you've done this with yourself, with your own real estate business and your own real estate investments is, okay, what are my goals? And then I can work my way back to figure out how realistic they are and how to actually accomplish them. Once we identify goals, current financial situation, purchasing power, cash, credit, other lending, if you need help with mortgage brokers, or you just need to understand your current options, then that's when we can actually break down the numbers and create an action plan. So we have your goals, we have your financial situation. Then myself and my partner, Matt, can come to you guys and say, okay, given your current position and what your long-term goals are, here's 2 or 3 types of deals that are available in our real estate market that offer what you need to reach your goals. And if that works, we do that within about the first 2 weeks. And if that works, awesome. Then we can start shopping or start planning on what types of properties to buy and how. If not, then we got to go back to the drawing board. Do you look at a different market? Do you get a partner? Do you get different financing options? Do you look at different types of deals? Whatever it may be, I find a lot of investors feel very stuck because they just haven't gone through the entire process, and they've gotten too many no's from lots of people, when the reality is it's never really a no. It's just a different way to do it in my experience.
I think this is awesome. I think this is also just such a great way, especially, you've worked out a plan that works for first-time investors, but also for seasoned investors to kind of know exactly where they're going to be. Question for you that I think the first-time investors might be interested in. So if I'm a first-time investor and I don't know exactly what I want to invest in, what would be your recommendation? Not in terms of investment, but process. How do I land on what I want to invest in? And is that something that you guys assist your first-time investors with?
That's a really good
conversation or whatever.
Really good question. A lot of it's going to come down to the financial options, right? So a lot of our first-time investors are people that have had a property or currently hold a primary residence that they've probably done well on, or they've managed their expenses and they've saved a significant cash pool. And they realize that, now would be a pretty good opportunity to buy a property. So they're thinking, okay, Zach, well, maybe I can get something at a better price than I could 6 months ago. So these people are coming with equity from their home or cash savings. A great first property is a duplex or a duplex conversion.
Awesome.
The reason being, and this is without knowing anything about anybody, this is magic. This is just some make-believe person.
This is our imaginary first-time investor.
Yeah. The reason those are awesome options are they offer some level of predictability, multiple streams of cash flow, ability to add value, and there's options in those properties. So I like and they're typically much more affordable and less, let's say, less of an undertaking than say a 6 or a 10 unit property, right? So it's a mix between financial upside, what you can actually pull off as a newer investor, and what you should actually be learning as a newer investor, kind of all heaped into one. So if I'm doing a duplex conversion or a duplex, I have 2 income streams. I can be cash flow positive in our market. If I'm doing the conversion, then I'm learning how to do with permits. I'm learning how to work with GCs, and I'm adding a lot of value. And then I get tenants in there, and I'm a landlord, so I get all that experience. Furthermore, the duplex, you can always move into it. Say crap hits the fan, you got to sell your primary residence, or you got to sell one of your properties. It's much easier to turn around and sell a good condition duplex in a decent area than say fire selling, a 6 unit building, a 7 unit building that has, a few tenant problems or needs some repairs. It's just a much more manageable first investment with potential to add tons of value and also multiple strategies to maintain or exit the investment with success.
I like it, Zach. I like it.
Right. So that's a really good question. And my first property, I did a video on how I went from 0 units to 11 units in 2 years.
Yep.
My first property was a duplex conversion. And then I lived in the top unit to live on the cheap.
I also house hacked.
Right. I was like, I could live for $200 a month more expensive than renting. And I owned a house. I was like, sick, I'm in. So, there are options with those types of properties. So before you ask about Waterloo Region, for anybody that knows Waterloo Region, you guys can probably skip a couple minutes ahead. So full disclosure, if you guys like, I live here, I know the area better than you, Zach. You don't know what you're talking about. Who cares? I know all this stuff. Skip a couple minutes ahead. For everybody else that doesn't know anything or very little about Waterloo Region, here's like the basics. We're about 600 plus people, right? We got 401 is, if you can see the mouse cursor, is coming in through here. Sorry, there's Cambridge right there. Toronto would be way up there. Cambridge, you go through most of Cambridge and you touch a little bit of Kitchener. Waterloo's the furthest. Okay. Those are the biggest cities. Kitchener is the biggest kind of geographic area for now. In our areas, insurance, lots of tech, lots of healthcare, public sector is huge. Waterloo Region, City of Kitchener, all the city municipalities, they employ a ton of people. And then post-secondary, University of Waterloo, Wilfrid Laurier, Conestoga College, and all three of those are buying up real estate in Waterloo and in Kitchener. Like downtown Kitchener, Conestoga just bought Market Square I want to say a year or two ago, and they're expanding like crazy. So they're like Conestoga College is massive.
I mean, what this is just so everyone knows, like multiple exit strategies. We don't, if you can go tenants, you can go students, you can go duplex, you can go a whole bunch of different things.
I can go young professionals, I can go singles, I can go small families. Like there's a diverse enough mix and there's enough people making enough money where finding good tenants isn't the problem. We had a client of ours bought a duplex and moved in, and they got 400 applicants or 400 messages in the first weekend of posting a 2-bedroom basement apartment in a back split. 400 messages.
It's wild. That is wild. And you have high-paying jobs here. Like it's not like it's not like a low-paying area.
You could be graduating making $70K working for a mid-level tech firm as a developer or software engineer, and that's like that's not even like.
That's like entry for those. Fun fact, Zach, I used to live in Kitchener for a short stint.
Where?
I lived off, I backed onto a small water aquatic area. But anyway, so I used to work at Service Ontario. That was my first government job, so I moved for it. But anyways, I used to do the work permits for people. Yeah. So I would see all that stuff. And yes, the entry level from these, computer science engineering programs is very impressive. Yeah. And that was 10 years ago.
I was going to say, Kayla, if real estate didn't work out, we should have gone into like software development or computer engineering. Exactly. You know what I'm saying? So there is lots of work here. A big thing as investors are this last points right here. Ion Rail is a local rail transit. It's like the Rockets in Toronto, right? The TTC. So basically there's one that went from Kitchener, downtown Kitchener, to all the way like North Waterloo, kind of where the Conestoga Mall is. Now they're extending that to Cambridge. So think about this. If I was an investor in Toronto 50 years ago, I would be looking at all the areas where the major subway stops are. Yeah. If I'm within 50 or 500 to 1,000 meters, like walking distance to a stop, I'm focusing on those areas. So there's lots of great areas to invest in, but if you're getting really specific and there's 2 deals that are the exact same, one's walking distance to an ion rail stop and one's not, all else the same, go with the one closer to the ion rail stop, because what they're going to start doing is redeveloping around these stops. They'll make little hubs. That's where apartment buildings, condos, small commercial complexes, storefronts are all going to be in the next 10 to 50 years. So I know it sounds crazy. I'm 31. I'm thinking 50 years ahead. But like if I'm still alive in my 80s, I want to invest in those areas. They're going to be much more profitable.
Well, it's like what they say about the Starbucks effect, right? Like if you see Starbucks investing, you should invest. If you see Costco investing, you should invest. It's the same type of thing. These people do research before they drop these things, but where they do. So a very, very good point.
And I will openly admit, I'm not the smartest guy in the room, but I bet you there's some people that are a lot smarter than you and I making those decisions for these people that are these companies that are $1 billion.
That's what I mean.
Right? So I'll take that with a little bit of a hint, right? So other than that, condos in Waterloo Region weren't really a thing until the last 10 years. Mm-hmm. Like our city could grow out. Now that we have downtown cores built up, they're going to continue. If you go through downtown Kitchener, uptown Waterloo, and parts of Cambridge, anywhere that there is, a parking lot, anywhere there's, an old dilapidated building, there are even like midtown locations, they're even starting to zone off and knock down and put small or to mid-rise condo buildings. And they're doing a lot of that around the tech hub and the transit hub. Everybody else out there, this is a free, piece of advice. If you look at King and Victoria in downtown Kitchener, if you're within walking distance of there, good for you. You're going to do great. You're going to do great. Furthermore, 401 access. As an investor, if you're looking to rent to commuters, if you're looking for larger single-family homes that you can maybe convert to legal duplexes, or you're looking for pre-construction detached homes, look close to a 401. These are quiet neighborhoods, just 2-3 minutes off the 401. Nice big detached townhouses there, stacked townhouses. If that's your cup of tea, that's not what I invest in personally, but we have a lot of investors that'll scoop up those types of properties, hold them for 5-10 years, or sell them on assignment for a profit. Close to the 401 should yield higher value in resale. But again, your downtown city centers are still, positioned to do really, really well. So now that we know this, this is some of the price data for basically since 2009. I also looked at 2007, 2008, 2009 data, and that was when the financial crisis happened. If you had to bet, Kayla, between 2007 to 2009, did prices go up or prices go down in Waterloo Region during the financial crisis?
Did they go like this? Because I just looked at ours.
Yeah.
It was exactly like up, down, up, down.
Up, down, up, down. But year over year, it was up every year.
Yes, ours was too, actually.
Crazy. And I was like, that blew my mind. So what we see here is like slow and steady until about 2016, then aggressive jumps up.
Yeah.
And then even where my mouse is right here, guys, between the 469, which was in 2017, these jumps here are still massive. This jump here, massive. You're talking double-digit percentages in a 3-month period, 4-month period. That's crazy. Real estate markets should typically move anywhere from 5 to 8% a year, and that's still pretty good. So we've seen such a big run-up. We've really just come back down to reality for now. So our average price points across all market segments, you're looking at about 720 now, 715, and that's combining all condos, detached, semis, towns. And where we've seen the biggest decline is going to be your detached, because detached homes had the most to lose. And also sellers of detached homes, they're much difficult to maintain. POAs, estate sales, moving out of town. These are motivated sellers that have got to get rid of their properties. So they're willing to take a lesser of a price. Now, next point, and you mentioned, or I mentioned to discuss a little bit further, is going to be your prediction on what prices are going to be like. And this graph is a really important one. For people who don't like the numbers, just skip ahead. But for everybody else that actually wants to know what the hell is going on, this is probably the most important data point if I was going to look at one thing. And this is months supply. So this is how long it would take our market to sell out if no new listings came up. In a traditional market, you need about 4 months of inventory to be balanced. Now, we still have under 2 months of inventory. And we went up a lot in the spring because properties take longer to sell, but we have leveled off. We have not gained more inventory because sellers are just saying, hey, Zach, you know what? At these prices, I'm just going to wait. Yeah. So we've kind of reached that point for now that sellers are like, you know what? If I can hold on to it for another year or two, I'll wait for the market to rebound and sell my property later. So some sellers are electing to stay longer. Some sellers are electing just to hold off because they're not going to get the price point they need. And everybody that bought within the last year is pretty much break even. So they aren't necessarily price motivated. So if they don't need to move, they won't move for the profit because it's not there anymore. So if inventory remains low and interest rates continue to rise, expect prices to stay the same, if not maybe come down a little bit because interest rates just won't be able to support the purchase prices. But if inventory continues to stay low, price points are not really expected to drop that dramatically. Sellers just won't bring their properties to market unless they absolutely have to. And then the buyers that do have to buy are going to have to fight for whatever listings are available. So in our market, we've seen the market kind of stay flat for the last 2 months, which was kind of unexpected as interest rates rise. But in this next interest rate bump and coming into the winter, we should see a lot of motivated sellers trying to dump properties before the end of the year. As an investor personally, if prices stay the same or they start to come down, we're advising our clients to take a serious look and just be cautious. Buy a deal that's a home run. You don't necessarily need to try and squeeze value out of every deal. Or really stretch and get creative. Stick to the basics. Offer, if you can, a firm offer, and then just really try and get the best possible price and terms. I know that sounds really general advice. That's what you want to do all the time. But heading into the end of the year, which was a year where prices slid dramatically, you should get some motivated sellers coming up in the next few months looking to dump some property.
Yeah, I agree.
So supply, until that changes, we're chilling. So we're going to go through these real quick. This would be good for you to compare to, Kayla, to your markets. So semis and towns, for our investors, we're looking at these around 500 to 700K. If I can get a nice semi-detached or town around 550, I can almost break even on what I can rent it out for.
Yeah.
Okay. So that might not be a bad option for a newer investor or somebody who likes a particular neighborhood. Like those are much more affordable options if you don't have capital to convert into a legal duplex or do a big renovation as well. You can buy it in the 500s, put 10 to 20K into it, and you're probably, break even, if not out, maybe 100 or 200 bucks a month, right? Single family detached, we're looking at 6 to 750. If I'm paying 750 for a single family detached, I needed to be pretty much ready to go into a legal duplex.
Yeah.
If I'm paying closer to 600K, then I'm probably going to be doing everything upstairs and downstairs. Legal duplexes, 800 to 950. We've seen some sell above 950, but these are typically like larger detached homes that have like a full house to live in and then like a one bedroom for like, that weird uncle that you have to have a separate place for.
Right. So it's like end users would be the people that are living in it for those ones. Yeah.
For investors, you're looking 8 to 9.
Gotcha.
For something in good condition. If it's 10 out of 10 and it's vacant, you're probably paying closer to 850. If it's a little bit weird or not getting great rents, then closer to like 750 to 800. And then 3 to 5 unit properties, you're looking at 200 to 300K per unit. These are typically selling like 9 to 1.2, 1.3, a 3 to a 5% cap rate. These are much more sporadic because, like I said previously, guys, purchase price for the rents all over the place right now.
Yeah.
If you don't know, go back to the beginning and go through how we find value in those types of deals. If you're finding purchase prices seem high for the rents you're getting, they probably are, and they're probably not that motivated to sell it. Now, rental rates. Single family homes in our market, guys, typically renting for $2,300 to $3,000. Legal duplexes. This is if you have it fully rented upstairs and downstairs. You should be getting $3,800 minimum. Yeah. You get closer to $4,500 if there are 3 bedrooms upstairs, 2 bedrooms in the basement, and they're in good shape. We rented out one beginning of this year and we got $4,500 for it. 3 bedrooms up. Actually, it was 3 bedrooms up and 3 bedrooms down though. That one was a big one.
Like standard bungalow, 3 up, 3 down? Yeah.
1 bedroom units, even if they're in basements, if they're in good shape, you're getting $1,600 to $1,800. 2 bedroom units, $1,800 to $2,200. 3 bedroom units, $2,000 to $2,500. So if you're upstairs, 3 bedroom unit, and you got a nice bungalow, 2-car parking, nice backyard, you should be getting $2,500 for that. I just like to notice the difference incrementally between 1, 2, and 3 bedroom units. You're only raising those by about $200 to $500 each, right? Which is significant throughout a year. But I just want to highlight a 1 bedroom unit, you can still get $1,600. So if you have an opportunity to add a unit to one of your holdings or add a 1 bedroom unit to a property, you get massive value out of it just off the bat. So don't underestimate the power of a rental unit if you guys are thinking about it. I think maybe right now, if people, we asked our investor event if people had recently rented out units and what their experience was like, and all of them without like question was like, I had too many responses. I was going crazy, right? Have you had to fill any units in your market in the last little bit?
So yes, actually several. I mean, I'm sure you're in the same boat. We help them buy the duplex or whatever, and then they ask us to rent it for them, which obviously we're happy to do. So we've had great response every time we list anything. Like right now we have, I think 3 listed, one of my own, and then 2 of our clients. One's a lower, so basement, 2 plus den. And then another is an upper 2, but I would say it's more of maybe a 1 plus den just based off the size of the other bedroom. Inundated with response for sure. The one thing I will say is I'm finding, sifting through it, the good with the bad, I'll say. So I think that's half the battle. But I'm in like a Niagara Region real estate group on WhatsApp, and I have been seeing that they're finding that it's slowing down. We haven't felt that yet, but I have seen some investors saying that. But again, I do think it's also how you market it, where you market it, how fast you respond to the people that are messaging you, because the rental game is quick. Like it's flaky and it's quick, at least in my experience. You can set up 10 appointments and 5 people show up.
I like the quick and flaky description because it's so true.
And that's just kind of the way that it is. But yeah, we've been finding the same. And our prices are almost on par, maybe a little bit lower, but almost on par with what you've got here too.
Yeah, rental rates have come up dramatically. And like, I think maybe another interesting question for anybody that's watching is like, do you think rental rates are going to be higher or lower this time next year? Right?
That one
like,
will be interesting for sure.
That one is a little bit more interesting for sure, especially for people that are holding real estate or thinking about getting into it. I'd be curious to see what people think on that. So one thing I really wanted to kind of just like summarize, we got a couple more minutes here, but a big problem that a lot of people have to get into those larger multi-units is raising the capital. Finding the deal is only a matter of time. For investors out there that are like seriously considering whether you're a seasoned vet or you're just starting to look at multi-units, finding the deal is not the hardest part. It is typically it's going to be acquiring the capital, right? And so a great way to do that is joint ventures. My partner, Matt, actually went through some of these slides at our investor event. So any of the investors that showed up to that event that have already seen it, you guys have already gotten this. If you guys want the whole slide deck, anybody watching this wants the whole slide deck from the investor event and what we covered, email me. My email was in the previous slides. It'll be the link in the description and I'll send you the whole slide deck. But basically joint ventures are like two or more parties, whether it's corporations, businesses, or individuals that just come together and partner on a deal, right? The rules are, there are no rules. You can do a JV however you want. You can do private side agreements. You can do it through a lawyer. You can do it on a napkin. You can do it on a handshake. You can do what the heck you want. Highly recommend you put everything in writing.
Yeah.
Just to be clear, Kayla and everybody watching, this is not legal advice. I'm not a lawyer. I'm not giving you, just to be very clear, this is not financial or legal advice, right? But consult a lawyer. Pros and cons of JV deals, like the big pro is partnering up with people can allow you to do deals that you wouldn't be able to do otherwise. Straight up, that is the number one thing, is I can get a piece of deals that I would not be a part of otherwise, and do not undervalue that. Another thing is you're leveraging other people's assets, whether it's their time, their money, or their expertise, or all three of those things. Say I have a bag of money, but I have no idea what I'm doing and I want real estate exposure. Okay, I'm going to go partner with a real estate expert. Okay, say I'm a real estate expert, but I don't have the capital for awesome deals. I'll say, hey guys, I have these awesome deals. Here's why they make sense. Who wants to partner with me on these? And it's a great way to diversify your risk. So a lot of people, they'll either start and then do solo, or they'll start solo and then start partnering up with people as they get bigger, because they don't have all the time and the money to do everything themselves. So your cons, you got to give up some equity. You got to rely on somebody else. So that's why it's really important to vet your partners. We'll go through a little bit of that real quick right now. And also really important to put everything in writing. All great if things work out well. But the conversations I like to have, whether I'm partnering with somebody on a deal or partnering somebody with a piece of business, is, okay, what happens if things don't go well in the first 3 months? What happens if things don't go well in the first year? What do we do?
I think that's and from personal experience, very important conversation to have. So because not everything always goes to plan when these types of things, like, it's the investment that we have is still going to work out, but when the city delays your permits by 8 months, you kind of have to bear that burden together, but that does not always happen. Absolutely.
Like, and I also just think that if you go through the process we covered with our investors is, what are your goals? What is your financial position? What types of deals make the most sense for you? Do those conversations align with what you want as an investor? With same thing with your partners you're considering? If so, then okay, you're heading in the right direction.
Yeah.
So why people do JVs, specifically bigger deals? You're developing, you're doing mixed use commercial, you're doing, burring larger multi-units. It's because you can't do it all on your own, or you want to diversify. So even if you have the money to pull it off yourself, you got $5 million cash. Okay, does it make sense for me to partner with two totally separate people in two totally different deals and split my funds 50-50? Now I'm a little bit more diversified in different cities with different partners with different types of deals. Okay, that may be worth diversifying for. Now, generally speaking, if you guys are interested in JVs, there's three kind of like components. This is typically how we like to think of it, is you got the money. So somebody wants ROI, wants real estate exposure as an investment, but they're hands off. And like, if you don't have contracting experience, if you don't have experience with permits, if you don't have experience analyzing deals, then that's probably where you're going to fall into. But if you are a contractor, if you have project management experience, if you think you're going to be good at those things and that's what you're really interested in and you want experience in that, then, maybe you're going to be the contractor or the project manager. So this is the person that's organizing all your permits, getting your contractors and your subs in, making sure the work's done well, sourcing good materials and finishes, right? Or you guys can become the expert, and you only become the expert through actually doing these types of things, right? And so this is somebody who has gone through the entire process, whether it's a duplex conversion or acquiring and managing multi-units. They They know everything from which markets they're looking in to what their criteria is for the deals, how to analyze them, how to negotiate them, how to get tenants and manage property managers, how to maintain these properties, potentially how to sell them and refinance them. This is somebody who's gone through the process a few times that, they have this locked and loaded, but they need people in place to either get the financing in order or to actually go in and do the work or to manage and communicate with the tenants. These are typically how we divide them. So how to structure your JVs, guys, is identify who you are, number one. So if I'm like, well, I want to invest in real estate, but I don't know really who I need. Okay, well, what can I bring to the table first?
Mm-hmm.
If you don't have money, but you have time and energy and experience, okay, you are not going to be the money guy. You're going to be the expert, or you're going to be the contractor and the project manager. That means that you can also in turn identify what you need. That means I need to go find the money guy, or I need to go find a contractor, or I need to go find an expert, and then start identifying what you're willing to give up. So if I'm not bringing any money to the table, but I'm going to do everything else, what percentage of that deal is worth it?
Yeah.
Are you working with a more experienced partner or a less experienced partner? Are you more valuable or less valuable to this particular deal with this particular partner? And be honest with yourself, right? I think people have a really tendency to overvalue, themselves, which makes a ton of sense. You're yourself, you're in your own head, you are who you are. But I also think people have a tendency to undervalue or underestimate what they can accomplish in 5 years and overestimate what they can accomplish in a year. So don't be afraid to give up something on a deal if it's going to get you a ton of experience that's going to accelerate your growth. And also don't be afraid to partner with somebody that can help you learn a little bit quicker. Yeah, you may be giving up equity in the deal, or you may be giving up a portion of it, but at the same time, these people could maybe teach you something or accelerate your growth way quicker than you ever thought, right? I totally believe that you can go faster by yourself and you go further together. Like, I wouldn't be nearly as far as I am now if I didn't have partners. This is just some words of wisdom for JVs. I think here, I just kind of wanted to summarize it. We started, we have over 250 people that have gotten connected with us just on our investor hot list. And then we've probably got another few hundred people that have reached out to us directly. What I can't stress enough is just don't be a stranger. We share a ton of stuff on our Instagram, tips and tricks, little information about what we see value in, types of deals we're seeing value in on our Instagram, as well as other content that we're pushing out on our YouTube with the Canadian Real Estate channel. And also just don't undervalue all the resources you guys have available on the Canadian Real Estate channel. They did a video on that guy that did, he screened hundreds and hundreds of tenants over the last 10 years. That is a university's course worth of tenant screening in a 20-minute video. YouTube University, I call it. It's fantastic. So if you guys don't want to follow us on Instagram, no problem. Email me direct with any of your questions, concerns, or ideas, Zack@PhippsBrittain.com. And I will reach out to you personally. Myself and our admin, Derek, can contact everybody on our investor hot list personally. This isn't a bot or a program. We're real people, and we want to learn what problems you're having, what types of deals you're after, and what value you need as an investor. That's how we win long-term as a business. And as an investor coming to us, we want to make sure we build those long-term relationships. So questions, hit me on the email. Otherwise, we'll probably be back next month with another video and go through some deals.
Awesome. Thanks so much, Zack. What I will say, guys, speaking of YouTube University, Zack just gave us the Coles notes of JVs and everything to know in a minute. So thank you for that. He went over a bunch of stuff, but that was definitely a take-home point. Zack, where can they find you?
Phipps Brittain Real Estate on Instagram. And I just got my personal Instagram back. Zachary John Brittain. Okay, if you want, I still do talk real estate. I'll do video tours of listings. But if you guys want to get in touch with me personally, that's a great way to do it. My email address, Zack@PhippsBrittainRealEstate.com or info@PhippsBrittain.com are going to be your best resources to get in touch. Instagram and YouTube for the content. If you guys want to be silent followers and silent supporters, that's the best way to kind of watch what we're doing and get more information on us as a business in our real estate market.
Awesome. Well, thanks so much for tuning in, guys. If you want to reach out, it's Agent Kayla S on Instagram, and all my other information's below. Until next time, thanks so much, Zack.
See you guys soon. Thanks, Kayla.